Imagine being able to predict your business's future with just a quick glance at a report. I'm not sitting here talking about full-blown analysis. I'm talking about quick hitters here. 75% of business owners struggle with reading the financial reports regarding their business, and it's costing them big time. What insights are you missing simply because you're just not utilizing your financial reports to their full capabilities? A lot of people have this common misconception that the financial reports are just for your bookkeeper or your accountant or your CFO. But the truth is, they're the most powerful tool that the business owner can use to drive their success. Listen, I get it. It can be so intimidating to look at your financial reports, but they're not just a bunch of numbers that don't mean a lot. Those numbers actually tell the story of your business, and learning to read that story is critical, and it's key to making better decisions that help you avoid costly mistakes in the future. Here are 5 steps toward leveraging your financial reports better. Number 1, understand the basics. Focus on the 3 key reports: profit and loss statement, balance sheet, and statement of cash flow. Each of these gives you a different perspective on your business's health. Number 2, track key metrics. For example, gross profit margin reveals how efficiently you're producing your goods or your services, whereas net profit margin shows the overall profitability of your business. So look for trends, don't just look at the numbers. Number 3, analyze variances. So compare your actual performance against your budget or your forecast. Ask why the differences exist. These questions don't have to be complex. They can just say, well, why was my revenue lower than expected? What caused that? And as the business owner, those should have some pretty common sense answers behind them as well. This is where you'll actually uncover opportunities for improvement in your business. Number 4, make sure that you're making data-driven decisions. Use your reports to guide your hiring, expansion, or cost-cutting decisions. So, for example, if you know that cash flow is going to be tight, make sure that you put off some of those more expensive decisions like hiring or equipment for the future. Number 5, review your reports regularly. Don't wait until it's tax season. Set a monthly or quarterly schedule to review your financials so you have time to correct the course of your business proactively. Now that you know how to interpret your financial reports, imagine taking it one step further, actually using those insights to create strategic growth plans. In our next video, we're going to walk you through how to build a financial roadmap for scaling your business. Trust us, you don't want to miss out.